Okay, all you guys at Forex Factory, this is JK. I'm going to bring you pretty much all the definitions that I spoke about last night in the thread. I'm going to pretty much give you those right here. We're going to take a system, like many of your systems on Forex Factory, free. I want to take something that is achievable for all you guys. So we're going to take a $1,500 account. You could go less than that if you want. I mean, I know some of you have micro accounts. That's the way I started, but that's fine. We have let's say a 40% chance of winning, 60% chance of losing. Now, what you have to realize is that some of those trades are going to be break even. You got to take your average win and loss. We're going to say our average win is 15 pips. We're going to say our average loss is, well, it's got to be less since we only win 40% win for the system to be successful. Otherwise, I wouldn't even trade it. But let's say that our average loss is 10 pips. Okay, now this is taking into account the spreads. We're going to take into account the spreads. Whenever you guys calculate this, I want you guys to put the spreads in because you gotta count that. I trade sometimes I trade futures. If you do that, you gotta count commissions. If you trade spread-free forex, you got to count commissions. I just want it based on sole number of pips. We're all about probability right here. We're not about taking a system and making it so beefy it's going to take $1,500 to $1 million in 2 years. We're here about consistent winning, keeping our maximum drawdown defined, moving forward, not looking back, and being able to trade the larger lot sizes without fear because we know that we have a guaranteed sum of money during double maximum drawdown, triple maximum drawdown. Now, I call it max drawdown, of course, because, well, probability says that it's max drawdown, but then why I do max drawdown times 2 and max drawdown times 3, if you want to put that in the formula, why I do that is simply because there's a human element in all trading. We can reduce it down to numbers, but when it comes to it, you're going to make mistakes in your trading, you're going to get emotional, and it's just not very good. Also, if you see me pausing this video, remember I'm in my trading right now. I can't let you guys see any of my accounts, so I'm going to be pausing it and redoing it and coming back in because I day trade. So when you see this, we're going to start with that account, $1,500, 40% win, 60% loss, average win 15 pips, average loss 10 pips. And I'll be back. Okay, so we're going to continue with this example, $1,500 account, 40% win, 60% loss, average win 15 pips, average loss 10 pips, and we believe, now this is where it comes into effect, how many pips do you guys think you can average a week? Now with this system, I know I'm going to get 10 trades. I know probability-wise, 40% win, 4 out of 10 trades per week. Well, if I get 4 out of 10, that's 60 pips a win, and if I get 6 losses, that's 60 pips a loss, so it's break even there. So I would need a larger sample size. So let's actually make this a 2-to-1 risk reward because I can see that this isn't going to work. I was trying to get a very lousy system so that I could show you guys how well it works, but with below 50% win, you're going to need definitely a 2-to-1 average win, average loss. Now remember, this is not my stop loss. This is just the average number of trade size that I lose. Let me get that down there. Yeah. Okay. Sorry about that. Dang. Okay. Now I'm back. So we're going to start with, I'm using OpenOffice.org calculator or spreadsheet similar to Microsoft Excel. You can do this with any spreadsheet. You can even do it on paper if you want to. But what I really want to do here is, this is part 1. I'm going to put the cells in. We're going to take this account, and our goal is to take it from $1,500 to $100,000 in 6 months with trading. Well, I'll give us a year on this one. With trading, we're going to trade, let's say we can make 20 pips per week. Okay, so I'm going to show you This is all the stuff in the account. Nothing is hidden here. I'm going to put it all in. I'm going to show you how to do this with any account, and we'll get started. So first thing you want to do is max drawdown, max D. The way you're going to calculate that is we've got a 60% chance of losing. So you're going to get out your calculator here. We got a 60% chance of losing, so we got to multiply it by itself till we get below 0.02. Okay, that's 3 times, that's 4, that's 5. Well, hold on, I screwed that up. 0.6 times 0.6 times what? 0.6. That's 3 times. Now we go 4 times. 4 losses, 5 losses, 6 losses, 7 losses, 8 losses. Okay, so we've determined that there's a 1.6% chance right there of us losing 8 times in a row. That's standard probability. It's the odds of rolling a 6 on a die over and over again. You take the probability of that happening, and then what you do is you multiply it by itself. Therefore, that probability has to happen over and over again. We all know that we rarely go on streaks. Just kidding. Actually, trading is very streaky. Therefore, we need to calculate this right. That was 8 losses in a row. So we've got 8 losses in a row. Okay, now I'm just writing down here. This isn't the formula or anything. 8 losses in a row. 10 pips per loss. Remember, spread included. We can't afford to count spreads in here because spread can be 2 pips. That can be damaging. It'll bring the win down to 18 and the loss up to 12. So you got to keep it in perspective here. 8 losses, 10 pips per loss. Therefore, we're going to say this. We're going to say 8 losses, 10 pips per loss. Our maximum drawdown is 80 pips or ticks. So our formula for maximum drawdown is, let me insert another column here. Got to move that over. We're going to put in our lot size here. Then we can draw our formula in, and that's going to be max drawdown is. Now this is just max drawdown is 80 ticks. So we're going to take 80 ticks. We're going to put, say, equals 80 ticks. We're going to put it in parentheses. Equals 80 ticks times A2. Okay, now you're going to see what this does. In here, we're going to put our lot size. How many dollars per lot? Okay, now I'm going to start off with this account trading. We're going to trade 1 mini lot. Okay, that may be a little much for you guys, but we're going to say it's $1 per pip. Okay, so you just put a 1 in there. So our max drawdown is 80. What we're then going to do is we're going to move every mini lot. 3, 4, 5, 6, 7, 8, 9, 10. Okay, so we're going to, this is a standard lot down here. $10 per pip. This is 2 mini lots, 3 mini lots, etc., etc. We're then going to take the max drawdown. We're going to move it by. We're going to fill. See how I clicked edit up there? Went down to fill. Down. Okay, so we can see that 80, 160, 240, 320, 400, 480, 560, 640, etc., etc. It goes on down. Why it does this is our loss, our maximum drawdown is always 80 pips. The way I count 80 pips is from 1.37 to 1.378 is 80 pips. I don't count in my lots. This is just major pips right here. You want to take the max drawdown. You've determined that once you get to this tier, I call each of these little bubbles tiers. These are all tiers. Once you get to this tier, your max drawdown is going to be 800. Okay, so we come back to this, and we've got maximum drawdown all included. So we're going to start with our C value. C is going to start off at 1500. Then this is the genius of the method. We're going to go over here. We're going to go over to F. And we're going to put in or sorry, G. We're going to put in margin. Okay, now the margin requirement in the U.S., I believe, is $200 for one lot of mini. Or sorry, $250 on average. This is just the average margin per contract. Some are different per lot. I'm sorry. So we're gonna go 500, 750. It's just gonna keep going, as you can see. 1,000. 1,250. This is total margin. So as you can see, that's what we're doing. 1,750. $2,000. 2,250. 2,500. Okay, so we got margin, and now it's set. So we're gonna say equals for the first tier after your initial. So this is 1,500 is your starting. It's going to equal B3, or sorry, B2 plus 1,500 plus the margin. Now what it's going to have to do is it's going to have to take the margin, which is 250. So we're going to have to say G2. Okay, what it's going to do is it's going to give me, so what it's going to do is it's going to give me 80 added to that 1,500, 1,830. So as you can see, that's what it's doing. It's essentially taking my margin, 250, 500, it's going to just go right on down. I don't even need that 2,500 because as you can see, it's just going to fill right on down. Okay, so we're going to lower our expectations. I didn't know it was going to be this low because the system was only 40% win. But what we're going to do is we're going to go GV, median, and GGV. Okay, so as you can see, we've calculated all the tiers. So this is how I read it. I read that when I get to 1,500, I'm going to trade one lot. When I get to 1,830, I'm going to trade two lots. Now, it doesn't matter if I get to 1,830, start trading two lots, and then get a maximum drawdown, I'm still going to trade two lots. Then when I get to 2,160, I trade three. And when I get to 4, it's 2,490, 5, 2,820, etc., etc., etc. It just moves on up. Okay, so what you're going to see here is guaranteed value equals C2 minus B2. So what this gives us is it gives us our account value minus our maximum drawdown, which is 1,420. We then take that and we fill it down. So it's taking each of these balances, subtracting the maximum drawdown, and arriving at a guaranteed value figure. GGV is just going to be C2, sorry, you got to put in the equals C2 minus parentheses B2 times 2. Okay, now that times the multiplication sign is hold down the shift key and press the number 8, just so you all know. And then we're going to get our guaranteed value in double maximum drawdown. So that's going to be 16 losses in a row. Now, we all know that that is a pretty rare occurrence. It's under 2%. It was actually 1.6%. So that's going to happen 1 out of every 108 trades. Follow me here. 8 trades is our maximum drawdown. The chance of getting a maximum drawdown is about 1.6% or 2%. So you got 2% of every 8 trades equals 2 times every 100 8-trade streaks. So if I trade 8 times today, I know that I only have a 2% chance of getting 8 losers in a row. Therefore, every 800 trades. Hey y'all, sorry about that. I'm gonna have to cancel this part. YouTube limits 15 minutes. See you.